This week ahead for Asian markets will be dominated by indicators from several key economies. First to Thailand, where Monday we get GDP figures. It'll be our first look at just how disruptive the ramp-up in protests has been since late last year for the Southeast Asian economy. Now, the World Bank predicts 4% full-year growth there if Thailand can move on from the instability and if exports pick up. On the other hand, the bear case scenario would be production shifting to more stable neighboring countries, something some Japanese companies are already considering. On Japan, the calendar is actually rather packed this week. We get GDP as well for Q4. That should actually be quite strong as consumers race to buy big-ticket items ahead of a planned sales tax hike. If it isn't, that may impact the tone at the Bank of Japan policy meeting, which wraps up Tuesday. Will more stimulus be necessary for the number 2 economy? That brittle capex number earlier this month has some people worried already. And one last one from Japan. We also have trade data released on Thursday. China exports trounced expectations. Can Japan do the same? The short answer, probably not. It's on track for a record trade deficit as signs emerge that Prime Minister Shinzo Abe's signature cheap yen policy may be raising import prices more than it is boosting exports. Finally, to China for a preliminary HSBC PMI on Thursday as well. Will factory sentiment mirror the uptick in trade, or will it prove more pessimistic? That'll be the question on lips of traders across many emerging markets, some that have seen asset prices tumble in part on fears of a downturn in the Chinese economy.